We talked about Chinese stimulus, which had been a major driver of currency as well as bond market. While China, has been trying to stimulate its economy for the last 3 years, and they have been announcing measures across the financial sector, the bond market, the equity market, as well as the real estate market. This time, the market participants took it quite seriously because this was a time where there was a coordinated stimulus from the National Financial Regulatory Authority, which is the NFRA, from the China Securities Commission, as well as from the PBOC. So all these stimulus announcements that we saw in September between 24th to 26th September were well coordinated and were accompanied by media statements, and there was also a promise of further stimulus going down as well. So the market participants took a strong notice of it, and if you look at the various measures announced, they were across monetary, fiscal, banking, property, as well as equity markets. So just to start with the monetary, announcements, there was a 20 basis policy rate cut. So China calls its policy rate as open market operation. So effectively, that's a policy rate cut, which they did of 20 basis points. They also have this medium-term lending facility in which the central bank lends to the commercial banks for 1 year, which in turn influences the loan rate of the commercial banks. So as we can see in the slide, there was a 30 basis cut on the medium-term lending facility. There was also a cut of 50 basis on the reserve requirements, which provides about 1 trillion RMB long-term liquidity to the banking system. So it's largely equivalent of our CRR. On the fiscal side, China has been grappling with weaker consumption, and hence, there was some announcements at a local level of additional, fiscal expenditure. The details are still sketchy. The government has indicated that it will give more explicit fiscal announcements probably at the end of October and November. So the market participants will be waiting for that. But at least for the first time in the recent history, the Chinese government announced cash handouts. So far, they have resisted cash handouts even for the poor. They focused on infrastructure creation, job creation, etc. But this was the first time where they announced, cash handouts for the very first time. So which also makes it that they are taking these stimulus measures quite seriously. And if you look at the real estate, where majority of household savings are invested, they had taken some tightening measures in the last 10 years, which they had been relaxing in the last 2 years. And so the current stimulus measures were a continuation of that. So as we can see, they have even cut the down payment requirement for second home for home buyers, so that to boost household spending. If you look at the funding cost as well, there was a re-lending announcement in which the local governments had option to buy property directly from the real estate developers and convert it into affordable housing. So earlier there was a ratio of 60-40, which now they have made it 100%. So there's a 100% direct funding from the central government to local governments to buy properties from real estate developers and convert it into affordable housing. Of course, there was also a announcement that on an average there will be interest rate cuts on the mortgage rates by up to 50 basis points. So depending on the tenors, depending on whether the loan is fixed or floating, but there will be interest rate reductions to improve housing affordability. There was also a potential plan to announce that by which the banks will be able to buy land from the builders to give some benefit to the builders, to give them more liquidity, and in future create more real estate. Also, they in 2022 they had announced 16 measures, different micro level measures for home buyers as well as for real estate developers, which were expiring in 2024. So they have extended those 16 point measure program on real estate till 2026 to continue to provide support to the real estate sector. On the equity market, they have announced a 500 billion RMB liquidity provision program for non-bank financial institutions to borrow money from PBOC with collateral and invest money in equity market. They've also announced a 300 billion RMB re-lending program for banks to support listed companies, share buybacks again to support equity markets. So yes, these measures were taken quite seriously by the market participants. And what really changes after this? So if we would recall, the Chinese government had announced a 5% GDP growth target for calendar year 2024. If we look at the current trends, the actual growth was way below the 5% target. So probably these measures in the near term, if continued, should help get growth closer to 5%. Actual growth may still not touch the 5% mark, but it will nevertheless help growth register somewhere near about. But more importantly, what it really signifies to the market that for the last 3 years, the Chinese government had been focusing on sustainable growth. So whether it was, if you look at the cancellation of IPO of Alibaba or action on, various real estate developers or action on edtech, overall, the Chinese government had been focusing on sustainable growth. If we look at all these measures, these indicate that the Chinese government once again, just like in 2008, just like in 2013, they want to focus again back to boosting growth. And at this point of time, they want to boost growth from consumption rather than infrastructure, which could be long-term positive. But we believe that market participants would need to see more details coming up, more rate cuts coming up, especially fiscal support coming up to boost consumption. As we know, Chinese household savings are in excess of 35% of GDP. So interest rate cuts have a limited impact on long-term and medium-term growth drivers for China. There's the fiscal stimulus, which should help boost consumption in the near to medium term. So whether these measures are sustainable and more durable on growth will be seen whether China is able to announce more fiscal measures to support further growth outlook.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.